Gold was raised to a tier 1 asset several years ago. So it is one of the foundations of the central banks that do own it. There's a few that don't. Just so interesting that here the head of a central bank is giving gold accolades while denigrating the currency that they use at the same time, saying basically that during a financial collapse, basically he's saying here that the currency could go to zero, gold will skyrocket. Now, gold is going to skyrocket measured in that currency, and it's because the currency is going down. But absolute purchasing power actually gets transferred from the currency supply to the gold stock.
Over the years, gold bugs, bullion dealers, and top investors in the space have had one central message for us all. The current fiat-based global financial system is unsustainable and dying. Many of these experts have posited that as the collapse nears, central banks will consider returning to a gold standard, which will be based on a globally recognized and acceptable commodity that has served the world for thousands of years. These warnings soon gained more traction as countries like the United States accumulated more and more debts and central banks started turning away from US Treasuries and refilling their coffers with gold, an idea they had all dropped decades ago. Yet, due to the insanely manipulated and suppressed precious metals markets, gold and silver investors have begun to lose faith, often disregarding these repeated warnings as musings of salesmen chasing their bags. If you are in the category of investors who have lost faith in any of these warnings and predictions ever panning out, then you need to watch this video to the end. Last month, during a now viral interview, Aerdt Houben, the director of financial markets for the Dutch Central Bank, revealed that the bank believes gold can be used as a backstop in the case of a financial collapse scenario. Houben also acknowledged that the Netherlands has recently increased its gold holdings, as have other European central banks. According to Houben, the Dutch Central Bank has equalized its gold reserves relative to GDP with that of countries in the Eurozone and outside of Europe, a political decision that the bank believes will come in handy during a financial crisis. Houben added that if there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard. This statement is not from a bullion dealer but a high-ranking officer of a central bank, and he is basically saying gold will be the safe haven of choice during a financial collapse. The DNB is outrightly confessing that its own currency is not strong enough to weather all storms and indirectly encouraging people to own gold for safety and protection. Before we break down how huge this could be, we will present clips from Mike Maloney's recent video as the popular precious metals analyst and author reacts to the news and what a new gold standard could mean for us all. Please watch, share, and like this video, subscribe to the channel, and turn on the notifications bell for more videos. Thanks, and enjoy the clips.
It's huge gains for anybody that's on the correct side of this event. And it's interesting that, we've seen that it seems like the central banks are more and more nervous about their system. And you know that when you've got a very complex system that humans are trying to manipulate, that wants to be self-correcting and auto-balancing, where you're manipulating it, and whenever you manipulate, there's something that you're doing that the free market wouldn't do. Pressures build up. It's another crack in the foundation. There is always the potential of the whole thing eventually imploding.
Paint the picture with a chart to get us started to sort of show the trend of what's been happening. This is in the Eurozone, okay? And these are total international reserves as a percentage of GDP. And you can see that from 1970, right? So for over the last 50 years, basically since gold became freely traded, the end of the Bretton Woods system, pretty much there's been a convergence. Look how tight all of the ratios here are of all these different countries. We've got Austria, Belgium, France, and so on. They're all hovering around 10%, and they're getting tighter and tighter in terms of their band over the years. And this can't really happen on accident. I mean, this has to be an intentional direction to move. What do you think?
Well, I see a bunch of different things in the chart here. One of them is that it was increasing throughout the 70s, the percentage of gold of their reserves. Gold was an increasing percentage. That was a function of price. Once it became freely traded and it was no longer $42.2222, so $42.22.22, which was a ridiculous price. once Bretton Woods ended and it became free trading, the very fact that price goes up, well, it's still measured in that price, though. And I don't know if the European central banks were marking it to market, but I don't think that they were accumulating a bunch of gold. It was gold going up in price that caused it to be more of their reserves and then going down in price. But then in the 90s and 2000s, there's sales going on, and it's just interesting that, and because this is a linear chart and not logarithmic, it makes the convergence look like more of a convergence than it actually is. But even on a logarithmic chart, there would be a convergence with all of them becoming very close together in 2008. In 2008, the change in direction shows a loss in faith by the central banks in the global monetary system. That's what it says to me, and that's the big message here. Gold started rising in 2001, but yet all of the percentage of reserves, these central banks were either selling gold or they were taking on more sovereign debt from other countries. They were buying more treasuries and adding to their reserves by buying assets other than gold, meaning gold is a shrinking percentage of the assets from 2001 to 2008. Then in 2008, oh my God, there's a potential that the whole monetary system could one day just implode, just fold. And they're going to that tier one asset that can't vanish. That, when you've got sovereign debt as your asset, if that country defaults on those bonds, your international reserves basically vanish at that point. And that's something that gold can't do. And it's the only asset that they've got that can't vanish.
Exactly.
And that's the reason you're seeing it go up. It's distrust in the global financial system.
In his interview, we have Houben, a high-ranking central bank official, talking about the importance of gold, especially compared to fiat currencies like the dollar and the euro. According to him, the Dutch central bank held 612 tons of gold, worth about 35 billion euros at the time of the interview, and diversified around the world. Here are some lines from the interview's transcript. Our total holding is worth about 35 billion euros at the moment, and we have diversified it around the world, as a good investor should. We've spread it over 4 locations, with about 30% in the Netherlands, just over 30% in New York at the Federal Reserve, over 20% in Canada, and 18% in London. The gold really goes way back. At the end of the 19th century, DNB started accumulating gold, which was important to establish confidence in our currency. The beauty of gold is that it's stable in value. It retains its value. That's one of the reasons why central banks hold gold. Gold has intrinsic value, unlike a dollar or any other currency, let alone Bitcoin. Gold has value on its own. It's a fungible product. It's a liquid product. You can buy and sell it almost anywhere in the world. So it's really an outstanding commodity to base an exchange rate system, gold standard, on. These lines can almost be lifted word for word from any Andy Schectman or Lynette Zhang interview. This is the beauty of believing and investing in an asset with such strong foundations. In his interview, Maloney also discussed the importance of gold and what returning to a gold standard will mean for the world.
He says gold, and then he says money, meaning their currency.
Yeah.
And it's currency backed by money, gold, because gold was the money before the currency existed. All currencies, all gold standard. I made a couple of a video, and I've said many, many times that gold standards suck. It's just a way of cheating gold. When you come out with some promise to pay gold, it's a lie because they always print more promises than they have. Fundamentally, so gold and silver have been called honest money for centuries. And because it's not a lie, they are not a lie. All of the currencies are a lie right from the beginning. Even when they're gold backed, they're a lie. So, yeah, gold standards. Okay.
Awesome. So Houben continues, the Dutch guilder was actually stable to gold via the dollar. We received dollars when we had surpluses, and we lost dollars when we had deficits, and the dollars were redeemable in gold. Okay, fine. Nothing new to us. Okay, hang on. I want to move.
This is the automatic balancing system that a gold standard would do, where you've got the globe and there would be little bubbles that would happen here and there. A bubble happens because, they're experiencing good times. They start importing goods from other countries. And when they import goods, dollars flow out of the bubble country to countries that are having a recession, stimulate that economy, and it grows and might go into a bubble while the one that's in a bubble shrinks. So it's this automatic balancing system that doesn't need anybody trying to manipulate it or guide it. And once you introduce the ability to, through either a gold standard or which allows a little bit of cheating, or just a fiat currency standard like we have now, which allows unlimited cheating until the whole thing implodes. Once you do that, bubbles can become huge. And then when a bubble bursts, there's a lot of pain for everybody. The automatic balancing system that gold imposed, gold was sort of like gravity. You could not violate it. When a government would try to do too much deficit spending, they had to borrow gold, and that would do something called crowding out, where there's not enough gold in the private community, and banks would have to raise interest rates, and that would slow down the economy, meaning that the government gets less tax revenues. So if the government tried too much crowding out, they would actually reduce the amount. If they did too much deficit spending or tried to raise taxes too high, they would slow down the economy to where they actually had less income. And so automatic balancing system that nobody, no politician, no banker, no economist could violate. And that's what was great about it. Today, with blockchain and hash graph technologies, with distributed ledgers as secure as they are, there is no reason you couldn't give every atom in an ounce of gold a serial number, or nanograms of gold, and you give them a unique identifier, and that gets recorded, and people can transact with gold. The central bank gold that's in a vault, they don't need to come out with a currency that is another lie where it's got some sort of fractional reserve scheme behind it. Fractional reserve is the evil culprit here. And we really need to, once you go with something that is honest, corrects so many problems in society. The great wealth disparity we have is largely a function of the monetary system itself. And we have what is just decidedly an evil monetary system. It is an enslavement tool. It's fraud, theft, and enslavement.
Central banks have been accumulating gold rapidly over the past 2 years. If anything, Houben's interview is proof that they are not buying all that gold to hold in their reserves. They are preparing for the inevitable end of the current financial system and the beginning of another era that will be built on the solid foundation gold provides. Do you agree with these assumptions and conclusions? Please share your thoughts in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.